Hi guys, I'm LT and this is my YouTube channel. This is the first video I'm going to be posting on this channel, obviously, and I look forward to sharing my little knowledge with you guys here, so we can all gain one or two from each other till we become consistently profitable. That's the goal, right? So let's get started. As you all know, most of you know me before, and you know that SMC, advanced SMC, is my strategy. I just recently changed to CLT and Msnr. So it's not that my advanced SMC is not working for me. It works because I learned from Tony Ike. Actually, it worked for me. But then the advanced SMC, there are a lot of people that are using that strategy out there, and then when people see you are using the same strategy like them, and it is working for them more than you, they will expect you to tell them what's right. Like, they expect you to review their trades for them, and then I don't like doing that, because most times people just send me somebody I don't know, just come to my DM, send me analysis. Is this correct? We both use SLP, right? Is this correct? Please, is this correct? What's the meaning of that? If I say is this correct and it is not correct, you're going to blame me for that now. So I just thought, let me go into another strategy that most people are not into. Then I discovered CLT. That CLT is not majorly used in Nigeria like SMC. In SMC is a very simple strategy, especially advanced SMC is a very simple strategy to understand, like just 4 things and you've understood the whole strategy. But CLT is just like you are going to university from scratch. There are a lot of topics for you to cover, so people are not using CLT just like that. So then I said it on my TikTok page and WhatsApp status that I'm going to be posting 2 videos in a week. On Sunday, I'm going to be posting trade breakdowns and sharing some knowledge with you guys. And on weekdays, I'm going to be posting videos for beginners. So beginners in the chat, stay tuned, like, subscribe, and turn on notifications so that anytime I drop video, you'll be the first to get them. So let's start now. What is CLT? CLT means candle range theory. And what's MSNR? MSNR means Malaysian support and resistance, right? So CLT focus on just one thing, and that's what candle. This is the range, and we have a sweep of the high or low of that range like this, and we have expansion to the other end of the candle. This is basically what CLT is all about. So this is literally what CLT is all about. This is not all low, like this is not the in-depth of CLT, but basically this is just what CLT is all about. You have your range, you have a sweep, and you have an expansion to the upside. Might not be a candle, but it must be a candle, sweep, then expansion to the external range liquidity. So what does MSNR means? MSNR means Malaysian support and resistance, and in MSNR we focus on MSNR is focused on literally 3 things, which are A-shaped key level, V-shaped key level, and open close key level. So this is A-shaped key level, we have a V-shaped key level too, and we have an open close key level. Open close key level are formed by 2 candles of the same color, a bearish and a bearish candle, 2 bearish candles that are consecutive, that follow themselves. Like you have a bearish candle here, you have a bearish candle here. The space between them are called open close key level, because this bearish candle right here now and this bearish candle right here, so this bearish candle right here and this bearish candle right here, the space between them, the open close level between them, is what we call open close key level, and this one right here is a V-shaped key level. This is an A-shaped key level. So the reason why we call them V-shaped and A-shaped key level is because on line charts we have them as V-shaped and A-shaped. So let me explain what A-shape means. A-shape means when you have a bullish candle and a bearish candle together. So that's both forms an A-shaped key level. And a V-shaped key level when you have the bearish and the bullish candle together, vice versa. So let me show you on the line chart. Now, as you can see right here, we had a bullish here and we had a bearish candle here. So right here on the line chart, it's supposed to be an A-shaped key level. As you can see, this is an A shape, normal letter A shape. So this is it. And for the V-shaped key level 2, we have a bullish and a bearish candle. As you can see, we have a bullish and bearish candle right here. So this place is supposed to be V-shaped in the line chart. As you can see, it is V-shape on the line chart. So that's what we call A-shape and V-shape levels, bullish and bearish candles in different scenarios. So and the open close key level is when we have two consecutive candles, like this bearish candle and this bearish candle right here. This bearish candle and this bearish candle, this bearish candle and this bearish candle, they are open close key levels. So what are A-shape key levels used for? A-shape key levels are used to sponsor more buys or more sells depending on what they are. But actually, basically, the main work of A-shape key level is to sponsor sells to the downside. Just like this, when we have an A-shape key level, we expect market to come back to this A-shape key level right here and continue moving down. Just like this. When we have a V-shape key level, we expect market to come to the V-shape key level and continue moving up like this. We have this like this. We expect market to come back to this V-shaped key level and then continue moving to the upside. For open close key levels too, they can sponsor buys and likewise sells too. So this one market can come back to this open close level, move to the upside. So market can come back to this open close key level, move to the upside like this, or it can come back to this open close level down here, up here, and then move to the downside, just like this. So this is basically what Msnr is all about: Malaysian support and resistance, just A-shape, V-shape, and open close levels. So right now I want to do a trade breakdown of the AUD/USD trade I took last week. If you have my WhatsApp number, you should know that I posted the trade. After the video, I'm going to show you the before and after, so you know that it's not something I just formed myself. So right here, I said CLT means candle range theory. So we have a range, then we have okay, let me explain one or two things again now. So we have a range, we have a sweep, and we have an expansion. So let's say we have a range already. Let's say we have open close key level already now, or let's talk about A-shaped key level and V-shaped key levels too. So for A-shaped key level now, for combining CLT and Msnr together, I expect to have an A-shaped key level right here. Then we have a candle range. Then I told you earlier that for CLT we are supposed to have a range, then a sweep of that range, and then expansion to the next target. So right here, I've told you that we expect A-shaped key levels to sponsor more sales to the downside or more buys, given the scenario that they are. So this place now, we expect it to give us more sales. So we have our A-shaped key level right here, just like this. Then we have our sweep of the range. This is sweep of the range. So this candle that swept the eye of this candle must touch the let me use the line, must touch the key level right here. This is CLT. Now CLT that I explained earlier means that we have a sweep of the previous high or the previous low. So we have a previous high right here that has been swept, and then the previous high now touch a key level right here, which is an A-shaped key level. And I said A-shaped key level are expected to make markets reverse to the downside. So right now we expect market to do what? To reverse down here now, because we have our range already. We have the sweep of the range, and the sweep, the candle that swept the range is touching an A-shaped key level and also closing within this candle. Those of you that know CRT very well, those of you that are familiar with CRT, know that once a candle sweep the range, it has to close within the candle, so it must not close outside the candle. So let's say the wick of the candle is here now, so it must not close outside the candle. Sure you get? Let me just put it down like this, so it will not be confusing that this one has touched it already. So the one that is sweeping the range must not close outside the range like this. As you can see, like, it must not close outside this candle. This is the range candle now. This is the eye of the candle right here, and this is the low of the candle right here. So for you to consider this one as a sweep of this range, it has to close within this eye and the low. As you can see, it closed within the eye, so we can consider it as a range. And when it closed, the wick has already touched an A-shaped key level right here, so we expect it to send market to the downside. Same for V-shaped key levels, and same for the open close key levels. I'm going to do examples of those ones in my next video. So for this one, let me just go straight to the breakdown video. Let me clear this one. Let me expand it right now. So right here, then first thing for you to do as a normal trader, for you to do is that when you want to analyze, you have to check your directional bias first. You have to know your directional bias. For me now, AUD/USD was bearish for the day, was bearish that day, because I know my directional bias. I know that I had a sweep here, I had a break here, and I had some things on the higher time from the daily and the weekly. So this AUD/USD was reacting from I think daily level. It was reacting from one daily order block or something like that. So it gave us a sweep here and a break here. So once you have a sweep and a break, don't know that the market is still going to downside. So we had a sweep, we had a break. I know the market, since we had a sweep here, we had a break, I know the market was coming for this external low, external liquidity right here. Even if market wants to reverse to the upside, it has to clear this low first. You know, market moves with liquidity, so this low right here is liquidity for us, because we had a sweep and a break. So even if market wants to disrespect this bias, it must come to this external liquidity first. And we had our fair value gap right here, and you know, this fair value gap is also a magnet for the market. So I know that my bias was bearish for that day. The market was around here that day, around here like this. So when I came in, I saw the market around here, and I saw this sweep right here. This candle swept this range while touching an open close level right here. Sorry, give me a minute. Yeah, so I said this candle range right here was swept by this candle while touching this open close key level. And as I said earlier, open close key levels or A-shape and V-shape levels are expected to retest market to the opposite direction. Sure you get? So this open close key level, this market swept this candle range. Sorry, hold on. So I said this market swept the range right here and touch this open close key level. And like I said earlier, open close key levels are expected to retest market. Likewise, A-shape and V-shape key levels. So right here now we had a sweep of this range, and we had a A-shape key level that was touching. We're expecting market to move to the downside. So the first target will be the low of the range, the low of the candle range. When you hit the first target, you can target I'm going to talk about where to place your TPs and SL levels later, but today let's just do the breakdown first. So right now we have the sweep of the eye. So we drop down to, for 4 hours, you can drop down to 15 minutes or 5 minutes time frame for your entries. So let me drop to 15 minutes now. I had it on 15 minutes. Okay, so this is 15 minutes time frame. So there's an entry pattern. There's an entry pattern that I always use. I'm going to explain that some other day, but I'm going to just use this one for example for you guys. So this is where the candle touched the open close key level on 15 minutes. So this is the line that represents the open close key level on 4 hours, and this is 15 minutes time frame. So once market got there right now, for you to know that the market is reversing, for you to know that that key level is going to hold, you should have a sweep and a break. I'm going to explain that too in the coming videos, but some of you guys should know what sweep and break means. A sweep means you have a sweep or you have a fake movement to the upside or the downside like this, then a break right here. As you can see, we have this break right here. There are some of you guys that know Msnr already. You can use this let me show you online chart. Can you see it right here? So we have this strip of this eye and break here. So break of structure right here. This one is indicating, this one is telling us that this market is now ready to move to the downside and is respecting that open close key level. So rest assured that the open close key level is valid. So right now I have this sweep. Why is it a sweep? Because after markets broke it, this is a fake movement. After market broke it, it now came back to give us the real movement. This is the real movement. After this fake break, it now came down to give us the real movement. So once we have this sweep right here and we have a break of structure, just know that this one is a fake movement. This movement to the upside is a fake movement, and we are now ready to sell. So right now, after a break of structure, the first thing I look out for is the pullback. The pullback right here, and this is a pullback for me. And then the next thing for you to look at is now your POI. And your POI, you have to use these Msnr levels that I taught you guys. So A shape, V shape, and open close. And as you can see right here, the next POI here is this open close level right here. So I'm expected to use this open close level. I'm going to tell you the reasons some other time, but just look at the breakdown. You understand some things already. So next Sunday, I'm not going to do breakdown. I'm going to explain these things. So right now, I had this break right here. On my first pullback, I had it here, and my key level, I had it here. And there's something very technical with that. The pullback, the POI that you are picking, must be at least on the 50% of the range. This is the range right here. As you can see, my POI is on 61 point something, so my POI is still good. You know, we sell at premium and buy at discount, so that's a premium zone. They are selling right there. This is a break of structure. We had our pullback here, and we had our key level here, open close key level, and that was my first entry. And as you can see, if you use candle wick, like those of you that use candle confirmations, you can see that we had something like dodgy candle here. This candle is indicating sell for us. So my first entry, it's TP. Then let's go to 4 hours again. I think my network is a bit bad. So let's go to 4 hours again and check our target. So once you have your first target met, which is the high or low of the, I think my network is a bit bad. Okay. Once you have your first target hit, which is the high or low of the candle, this low of the candle. As you can see, this one is the range, this one is the sweep, and this one is the expansion to the downside. Once you have a target met, you can expect market to go to the external range liquidity. Once you have a target met, this is target met like this now, but we've not reached our external range liquidity, which is this low we are going for, or this low. So you can still look for more entries till the market reach there. So on 15 minutes now, I think I had another entry. Yes, I have 2 entries. So the second entry was this one right here. Okay, I think the second entry was on 5 minutes actually, because let me check 5 minutes, because I think I used an SMC terminology there. I used an SMC concept there. I'm going to talk about it. So I'm just show you the entry. Okay, right here now. This is it right here. We can also use the Msnr strategy I taught you now, which is sweep, break, and retest again. So this is sweep. This is a fake movement to the upside. Why? Because after moving to the upside, markets came and broke the low again. So this is a sweep right here. This is a break right here, and we can use this pullback right here now. Can use this pullback right here. Then next key level, open close key level for our entry, right? Then stop loss on the TP, just like this. Something like this. And you have your TP hit like this. Yes, something like this. So but then I think this was what I did. This was what I did actually, but I had another concept for it, because on 15 minutes, as you can see, market was consolidating right here. Market was consolidating right here. You had a consolidation, and what does consolidation mean? Consolidation means you now have a move to the upside or the downside. You're just ranging in one particular zone, just like right here now. You're just ranging in one particular zone. So market is just moving to the upside, coming down, moving, coming down, moving, coming down. Not like these ones that is going down, going down, going down. This one is just moving, coming down, moving, coming back, moving, coming back. So when we had this consolidation right here now, I knew that after a consolidation, we should have a manipulation. And after a manipulation, you have a distribution. So these are SMC basics. These are basics of SMC. So after a consolidation now, I expect a manipulation. Manipulation means just like CRT, that you have a range and you have a sweep of the range and you have an expansion to the downside or the upside. This manipulation right here now, when you have a manipulation, you have to have a key level or something that must sponsor the market to the downside or the upside. So I have an A-shaped key level right here, and I have my manipulation right here. I know that once markets get out of this box, you can see this box. You can see this multiple candles inside this box. 1, 2, 3, 4, 5. Once market gets out of this box, this manipulation zone, and touches a key level that can sponsor it to the downside, it will surely expand. So this is accumulation here. And manipulation means it manipulated this box, this zone right here, this consolidation zone, manipulated it to the upside, touched an A-shaped key level right here, then started moving to the downside. So you get something like this. So just like this, and that was why I had this sale also. So this will be the end of the video. I'll show you the proof of work now, and you should please subscribe, like, and turn on notifications, share to friends and family, so that YouTube can recommend my videos to other traders that need this knowledge. So please subscribe and share. Don't forget to turn on your notifications too. So let me just show you on my Telegram. As you can see, this was this first trade right here. This first one right here, this was the before. This was the before that I saw it on my trading view, I had it. Then market triggered right here. I had my confirmation here and I stacked because I had my confirmation candle, so it's moved and I got my first TP. Okay, it didn't hit the TP. I was targeting the external low straight away. So it didn't hit the TP, and this was the accumulation, manipulation, distribution that I was talking about. This was the before. As you can see, I use this white box to mark out the accumulation. Then I expect the market to manipulate outside the box, touch a key level, then distribute. So that's accumulation, manipulation to the upside, and distribution to the downside. That was why I had this TP right here. So thank you for staying to the end of the video. Please subscribe, like, and share the videos to others. Thank you.